All right, let's break down GSI Technology's latest earnings report for their first quarter of fiscal year 26. Now, management had some pretty big operational news to share, but, well, the market's reaction told a completely different story. So let's get right into it.
So, on the surface, the numbers actually looked pretty solid. Revenue was up, margins were expanding, but this is what happened. A drop of nearly 14% in the trading session right after the call. I mean, that is a really tough reaction from investors.
And right here, this is the fundamental puzzle we're trying to solve today. On the one hand, you've got revenue jumping 35% year over year. And, big news, their key next-gen chip, the Gemini-II, is officially ready for production. That's huge. But on the other hand, the company is still losing money, their guidance for next quarter was just okay, and now they're flagging some pretty serious supply chain problems.
So what gives? Why the huge disconnect between the great operational progress and the stock just getting hammered? The answer, as always, is buried in the details, in their strategy, the challenges they're facing, and what investors are really waiting to see next.
Okay, first things first. Before we can understand the market's mood, we have to look at the hard numbers. Let's see what the company actually put on the board this quarter.
So the top line looks great, right? Revenue came in at $6.3 million, which is up a solid 35% from this time last year. And check out the gross margin. It expanded by a massive 1,100 basis points to 58.1%. That's fantastic. But then you look at the bottom line, a GAAP loss of 8 cents per share. So even though the core business is showing some real strength, they're still not making money. Now, to really get how GSI can have these conflicting results, you have to understand their core strategy. They're basically running two different businesses under one roof. They call it their two-track strategy.
So track one is all about defense. It's about protecting their legacy SRAM business. Now, this is a mature business, but it's a critical cash flow generator. And demand here is actually rising because these chips are used in AI chip emulation systems. Then you've got track two, and that's the offense. This is their big bet on the future, pushing their innovative associative processing unit, or APU, with the Gemini-II chip leading the charge straight into those high-growth AI and defense markets.
Now, this quote from the CEO, this was, without a doubt, the single most important piece of news from the entire call. See, for a small tech company like this, getting brand new silicon to a production-ready state is a massive, massive de-risking event. It means the technology works, the kinks are worked out, and they are officially ready to sell. This is the bedrock of their whole growth story.
And this is exactly where they expect that growth to come from. See, Gemini-II isn't trying to compete with those monster GPUs in some huge data center. No, it's designed for the edge. We're talking about things like satellites, drones that have to operate in GPS-denied areas, and even processing large language models on low-power devices where a big, power-hungry GPU just wouldn't work. This is how they carve out their own niche in the AI world.
So the strategy is clear, the product is ready, but having a great product is one thing, executing in the real world is a whole other ballgame. The company's dealing with some serious external pressures, but they've also got some pretty clear catalysts just over the horizon.
Okay, the biggest headwind they're facing right now, bar none, is the supply chain. Management basically explained that because of US tariffs, manufacturing is shifting out of China and into Taiwan. This is creating a huge capacity crunch over in Taiwan, which is where GSI does its back-end work. And the result? Lead times have basically shot up overnight, and that's going to directly impact how much product they can ship in the second quarter.
But on the flip side, there are three key things that could totally change the story here in the next 3 to 6 months. The big one, the one everyone is waiting for, is any news of initial purchase orders for Gemini-II. That would be the ultimate proof. After that, landing any new defense or industrial contracts would be a major win, and of course, just simply hitting their numbers next quarter would help a lot.
Which brings us to our final question. We've seen the results, we get the strategy, we know the headwinds, and we see the potential catalysts. So where does that leave the stock, and what should we expect to happen next? So let's try to game this out. What's our prediction for the upcoming quarter? More importantly, what's actually going to matter to investors when that next report comes out?
So here's our prediction. We think revenue will probably land right around the midpoint of their guidance, so about $6.3 million. But honestly, the exact revenue and EPS numbers, they're not going to be what moves the stock this time. The absolute key variable is Gemini-II. Any announcement of a customer qualification, an initial order, that will completely overshadow the quarterly financials. The stock price is going to be driven by news, not by the numbers in the spreadsheet.
So, what's our final take?
Look, the company has made incredible progress on the operational side. Getting the Gemini-II chip ready is a huge technical achievement. But you have to balance that against the fact that they're still losing money, they've got new supply chain risks, and the market is clearly skeptical. Until they can turn that production-ready silicon into actual real revenue, the stock is probably going to trade in line with the broader market. And for that reason, our rating is market perform.
And that's our breakdown of the quarter. Just as a reminder, this content is for informational purposes only. It is not financial advice.